Bitcoin is commanding attention today, surging dramatically over the past 48 hours to flirt with the 97,000 level. This rally isn't just noise, it's underpinned by significant fundamental developments boosting investor confidence. Two major catalysts stand out: a massive corporate buy-in and renewed optimism surrounding crypto ETFs. First, let's talk institutional conviction. Michael Saylor's MicroStrategy, already a giant in the Bitcoin space, made a headline-grabbing move. The company announced a staggering $21 billion stock offering with the sole purpose of acquiring more Bitcoin. This aggressive at-the-market raise, detailed in their Q1 2025 report, signals unwavering belief in the asset. Following its latest purchases, MicroStrategy now holds approximately 553,555 Bitcoin, the largest corporate stash globally, currently valued around $53 billion. According to CEO Phong Le, the market reacted enthusiastically, boosting their share price by 50%. Liu highlighted that MicroStrategy is helping establish a Bitcoin treasury standard, a strategy now reportedly adopted by over 70 public companies. This trend of corporations holding Bitcoin as a reserve asset is fundamentally tightening the available supply, providing strong support for prices. The second major driver is a shift in sentiment on the regulatory front, specifically concerning exchange-traded funds or ETFs. While the SEC caused some jitters earlier with decision delays, the mood brightened significantly following a new spot crypto ETF filing by 21 shares for the Sway token. This move has rekindled hopes for broader approvals, including the highly anticipated spot Bitcoin ETFs, potentially later this year. Remember, the launch of spot Bitcoin ETFs in early 2024 was a watershed moment. BlackRock's iShares Bitcoin Trust, for example, reached $10 billion in assets faster than any ETF in history and now holds around $35 billion. As Bitwise CIO Matt Hogan noted, institutions are adopting these products at an unprecedented rate. Why does this matter? Because it opens the door for trillions of dollars held by pensions, endowments, and traditional asset managers to flow into Bitcoin through regulated, familiar channels. Even state legislatures, like Arizona's recent move towards official crypto reserves, are signaling broader acceptance. So, where does this leave the market now? Bitcoin's rally has brought this psychologically crucial 100,000 level into sharp focus. This is a potential battleground. On-chain data suggests some long-term holders might look to take profits near this mark. However, countering that, a significant number of Bitcoin have recently moved into long-term holder status, even at prices above 95,000, indicating strong conviction from buyers undeterred by current valuations. Adding another layer is the macroeconomic picture. Market expectations are leaning towards a Federal Reserve rate cut in the coming quarter amid signs of a softening labor market. Historically, easier monetary policy has been a tailwind for risk assets like Bitcoin. Traders are likely positioning for this, adding to the current upward momentum. Looking longer term, these developments reinforce a bullish narrative. Growing institutional adoption locks up supply. The post-halving period historically favors price appreciation, and regulatory pathways are clearing. Analysts like Tom Lee are even projecting potential targets as high as 250,000 in 2025, citing these strong fundamentals. However, it's crucial to remember Bitcoin remains inherently volatile. Significant pullbacks are always possible, even within a larger uptrend. Discipline and a long-term perspective remain key for investors navigating this space. In summary, a potent combination of large-scale institutional buying and positive regulatory signals has propelled Bitcoin higher, with the 100,000 level now the key threshold to watch. While short-term volatility is expected, the fundamental picture for Bitcoin continues to strengthen as it integrates further into the mainstream financial ecosystem.